Real estate. Investment tips for beginners. Welcome, you are here. I am speaking book. You don't read the book. Allow me to read it for you. We lead you to the world of the knowledge. Just exchange your a few minutes to skill with us now. Please keep listening and watching. How to invest in real estate now to reap the benefits later. Simply stated, when investing in real estate, the goal is to put money to work today and allow it to increase so that you have more money in the future. The profit, or return, you make on your investments must be enough to cover the risk you take, taxes you pay, and the other costs of owning the real estate, such as utilities, regular maintenance, and insurance. Real estate investing for the beginner can really be as conceptually simple as playing Monopoly once you understand the basic factors of the investment, economics, and risk. To win, you buy properties, avoid bankruptcy, and generate rent so that you can buy even more properties. However, keep in mind that simple doesn't mean easy. If you make a mistake, the consequences can range from minor inconveniences to major disasters. 4 ways to make money investing in real estate. When you invest in real estate, there are several ways you can make money. Real estate appreciation. This occurs when a property increases in value due to a change in the real estate market. For example, the land around your property could become scarcer or busier, like when a major shopping center is built nearby. Or you could have made upgrades to the property that make it more attractive to potential buyers. Real estate appreciation is a tricky game because it is somewhat unpredictable, making it riskier than investing for cash flow income. Cash flow income. This type of real estate investment focuses on buying a real estate property, such as an apartment building, and operating it, so you collect a stream of cash from tenant rent. Cash flow income can be generated by other types of real estate besides apartment buildings, such as storage units, office buildings, retail establishments, and rental houses. Real estate-related income. This income is generated by specialists in the real estate industry, such as real estate brokers, who make money from commissions on properties they have helped a client buy or sell, or real estate management companies, which get to keep a percentage of rents in exchange for running the day-to-day operations of a property. Ancillary real estate investment income. For some real estate investments, this can be a huge source of profit. Ancillary real estate investment income includes things such as vending machines in office buildings or laundry facilities in rental apartment complexes. In effect, they serve as mini businesses within a bigger real estate investment, letting you make money from a semi-captive collection of customers. Your first property investment. There are several ways to buy your first real estate investment. If you are purchasing a property, you can use debt by taking a mortgage out against a property. The use of leverage is what attracts many real estate investors because it lets them acquire properties they otherwise could not afford. Using leverage to purchase real estate can be dangerous because, in a falling market, the interest expense and regular mortgage payments could drive you into bankruptcy if you aren't careful. To manage risk and protect yourself, consider holding real estate investments through special types of legal entities such as limited liability companies or limited partnerships, rather than in your own name. You should consult with a qualified attorney for their opinion as to which ownership method is best for you and your circumstances. If the investment goes bust or someone slips and falls, resulting in a lawsuit, these legal entities can protect your personal assets, meaning the worst that could happen is you would lose the money you've invested. You will have peace of mind knowing that your retirement accounts and other assets should be out of reach. Pros and cons of real estate investing. Pros: less risk and volatility than the stock market. Can be a good source of cash flow. Loss of tax deductions. Properties deliver good long-term return. Cons: not as much potential for aggressive return. Can require a lot of cash. Poor liquidity. Dealing with tenants and building issues can be difficult. If you like speaking book, please support our channel by giving your subscribe to our YouTube channel and providing your click like on the video. If you think we missed something, please leave your comments and suggestions down below. We would love to hear from you. We hope that this provided you with not enough information and confidence to step out of your needing. In case if you do have any questions, please leave your question in the video comment box below. Recommended reading: you may also enjoy the following books. Thanks for watching.